welcome you to the Soltesz Institute. My name is Viktoria Soltesz. I'm the founder of the Soltesz Institute, and our mission is to make the payment and the banking industry more ethical, more transparent, set standards, and that's why we are talking to different payment experts and professionals who are bringing their wealth of knowledge to us and share with us, because we believe that we can only build this industry together as a team. Today, we are going to talk about payment data, which is really close to my heart, because during my consultancy, I can somehow feel that businesses often misdiagnose this expression. There is a lot of information out there, but seems like that businesses are unable to figure it out how to use it, how to maximize this data. And the biggest problem, obviously, that payment and banking is still on the side. It's just a side function of finance. But when we are talking about payment data, it's even more, let's say, out of the vision of the management. That's when I thought that it would be good to talk about this payment data. Let's see how we can maximize it, how much information we can get out of our payment data, why payment data matters, and obviously where to find all of this information, where to look for it, how to arrange it, and if we don't have it in the right format, how to ask our payment providers or gateways or anyone who is processing the payment today for us, ask for this information. Because when we are having, for example, a bank account, we can see that there are bank statements with all of those information on it. But when it comes to card payments, alternative payment methods, there are so much information out there. What got rejected? Where are the chargebacks coming from? Different, fraud codes. So that's what I thought, that we really need to talk about it. And the upcoming 1 hour, we're gonna go in the nitty-gritty of payment data and see what can we maximize out of this information. So thank you very much, Joris, to join me. Welcome you to the Soltesz Institute. If you can just tell a bit more about yourself and how did you end up being, a payment data expert, because I think no one really wants to be a payment data expert from the young age. How did you end up in this industry? That would be really good to share your journey with us to get a bit more understanding about where you're coming from.
Yeah, so first of all, thank you very much for inviting me to the webinar. So always very eager to talk about payments. It's indeed a passion, and a passion I like to share with other people, of course. Indeed, I have a background about 20 years in financial services, 20 to 25 years, working in a lot of different roles, mainly on the IT side. But I've done like any possible role in the IT lifecycle, from development up to architecture, but also business analysis, product management, and so on. And that in multiple spaces. So I did in securities, in credits, but since the last 10 years, mainly focused on payments. And so also on those payments, I worked on card payments. Today, I'm working more on account-to-account payments. So also there, I covered quite a big spectrum, because payments, it seems easy, but in the end, it's a complex world with a lot of details and a lot of technicalities, a lot of complexity in the end as well. Today, I'm working for a company that's called Intix. Intix is a Belgian fintech that is actually offering a transaction data management platform to banks all over the world, financial institutions in general, all over the world, in order to better manage and, let's say, capture and exploit and analyze their payment data. In that regard, obviously, I'm day in, day out working on payment data, discussing with our customers to see how can we maximize the value that we can get out of the payment data that is circulating in the financial services industry.
That's great. I noticed that oftentimes, when, for example, sales drops, companies often misdiagnose this as a symptom, and they either give discounts or they start a new marketing campaign, and they are rarely looking into their payment data to figure out maybe the problem is with the payment method, maybe the problem is with, the technology. I think it's fantastic that you joined us today, because you are showing us the technical part of the fintech, because we are talking a lot about the fin part, the finance, the regulation. A lot of times, accountants are empowered to make decisions on banking and payments, and good luck if your accountant is giving you, advice on technology or customer experience, right? So it's good that you are with us today, so you can show us everything from the technical perspective, that why it matters and obviously why payment data is important and why we need to talk about it. So as usual, we have some questions from the audience, and this is going to give us a nice skeleton for the conversation, so we can go through the questions. But these questions are really just an indication to give us some guidance of what to talk about. I'm sure that we can talk about this subject for years if you want to, but we should just get somewhere. So the first question is, I think it's twofold, because it's asking how can banks, and obviously financial institutions, payment providers, and the providers, and also their customers who are using their services, transform payment data into strategic business assets. So maybe you can just explain to us that what's the main difference between the providers using the payment data of their customers, and what's the difference between the customers are using this data for their own sales?
No, absolutely, indeed. And there is, of course, a big difference. But before diving into, let's say, into the details, I think it's really important to understand a bit like where payment is coming from. So in the end, nobody really likes to pay. A payment is a means. It's obviously not something that you want to do. It's not an objective in itself. And for bank and also for the customers, that means that payment should be as frictionless as possible. We always say frictionless as possible. That means that the payment should be part of the full journey, and it should be as cheap as possible, as reliable as possible, as transparent as possible. So you want to know upfront what it's going to cost me when it's going to be executed. You want to be obviously you want to have it 24/7, 365 available, and so on and so on. So first of all, that is very important first for a bank and also for the customers to offer that service. So that is the minimum service level that should be offered with regards to. If you don't offer that already, let's say, puts a burden on afterwards exploiting that payment data. Once you have, let's say, that foundation, that base layer, let's say, of your payments, and your payments are going well and so on, you can start exploiting the payment data. Now, payment data, we always think, okay, payment data, just a creditor, a debtor, maybe the account numbers, the amount, the currency, maybe a comment that you have typed into the payment. But when we talk about payment data here at Intix, actually we're thinking of much more details, because in the end, when you initiate a payment, you also initiate it via a specific payment method. So that means that you're probably initiating it from a specific device, and you know the IP address of that device, the MAC address of the device, the operating system, which browser it was used, and so on. So all that information, that how the payment was initiated, how it was routed, where it passed through, which checks were done on it, like KYC checks, AML checks, fraud checks, and so on. All that is payment data. And so it's not just, let's say, the simple payment data that we think of, but if in the end, if you are able to collect all that data that surrounds the basic payment instruction, let's say, it offers you a wealth of information. And indeed, as you mentioned, that wealth of information can be exploited. It can be exploited internally by a bank, but it can also be exploited by the customers. And so internally by the bank, because they can get better insights about the customers, they can get better, they can optimize their own processes, and so on and so on. Additionally, at the customer side, there is also a lot of benefits to come. The customer, obviously, if it's a retail customer, let's say like you and me, we can get more insights about our spending pattern or about our income pattern and so on. But for a business, it's even more important, because ultimately the payments give an indication of what our customers are, how they are paying, which methods of payments, which is the average amount that they are using, are they paying correctly, are there any wrong direct debits, and so on. So there is a lot of information there to exploit, both by the banks as by the customers, to give like intelligent insights, and that obviously can then create a lot of added value for both parties, let's say.
It sounds very complex, and I'm sure it is. So obviously you need the relevant tools to make your life easy, but it's at the end of the day, it's up to the management, the payment department to set up those kind of tools right to give the relevant payment data for their own business, right? So I don't think that there is one size fits all, because maybe my company is targeting, I don't know, Latin America with alternative payment methods. You are targeting Europe, and you've got cards and bank wires. So those are different payment methods. But can you maybe just give us some insights, a success story, let's say, when a bank have successfully transformed their payment data into, numeric values that all right, they didn't use the payment data, but as soon as they started to pay attention to that, what are the cost cutting opportunities or options for, earning a bit more? Maybe they reduce the fraud. Can you give us a bit of insight of a real life case?
Absolutely, and there are a lot of pillars. Let's say it's not just one category where a bank can, let's say, exploit the data. So the payment data can be exploited in multiple ways. So actually, you could identify 4 categories where payment data can be exploited by a bank to give, let's say, better service, to give better products to the customer. So first of all, you can identify certain customer insights. So the first one is, if you see outflow of money going to a competitor bank, and it's always on serious amounts, and you see that it's on the creditor name is the same as the person, as the customer, that can be an indication this customer is moving money to a competitor bank. It's a bad indication. It can indicate churn. There are also upselling opportunities that can be identified. So for example, a customer is buying a car. That can be an opportunity, because when you identify that in the payment, it can be an opportunity to sell a car insurance, to sell a consumer credit, these kind of things, or you see certain evolutions in the family spending that can be sort of indications for selling certain financial products. Additionally, you have on segmentation, for example. So traditionally, banks were segmenting quite easy, like you had the retail customers, the mass affluent customers, the private banking customers, and that was a bit the same in the companies. You had the SMEs, and then you have mid-corps and then large corporates. But obviously, when you look at segmentation can be much more richer. So you could have people that love sports, people that love certain hobbies, and so on. Targeting specific communications to these people that like a specific sport and so on can make a much more sticky and much more customer engagement. But obviously, how do you know? You're not going to tell your bank, I'm a sports fan of athletics, for example. But obviously, in the payment data, you could potentially see it, because if you do certain spendings in athletics, it's probably an indication that you like athletics, and so you could segment and you could identify your customers based on their spending pattern. So that's the first category is about, say, better servicing as a bank your customers by analyzing them, by identifying better. The second part is more internally. Internally, the data, the aggregated data of all the customers can be used to identify certain economic trends, certain trends in the business, certain things on which obviously a bank can act upon to change a little bit their pricing, change a little bit, introduce new products, introduce new marketing campaigns and so on, which then probably will be a bit of ahead of the trends, because they could already identify the trend immediately in the payment data, maybe before it's even become very public. But it's also a lot of operational improvements can be made internally in the bank. So traditionally, bank was, if they received the payments, for example, in Europe, they were sending it via SEPA payment, and they were using SWIFT for an international payment. So that was quite easy. You had 2 types of payments, and they were sent like one channel or the other channel. In the meantime, there are a lot of different routing mechanisms. So there are all kinds of new payment methods and payment rails that are being introduced, which gives a lot more options, let's say, especially for international payments. SWIFT is relatively expensive. And so there are a number of fintechs that are offering now their services to banks for offering cheaper and better and more reliable and more faster payments. And so instead of having this very simple case, I'm just routing my payment always to SWIFT for an international payment, a bank would say, okay, I'm routing for this type of payment. I know from experience from all my previous payments that if I need to send a payment to Australia, it's much better to send it in that route because it's cheaper, it's faster, and so on. But maybe based on my experience of my payment data, if I have to send a payment to Thailand, I'm using another route. And so obviously that can then give a better service and also a lower cost for the bank based on all that experience. So that's the second group, the group, let's say, of internal efficiency improvements. Then it's a bit what you already referred to is the bank can also help customers to, like typically business customers, to analyze their payment data so they can indeed expose to their customers insights into their customers, into not the customer of the bank, but the customer of the customer. What are your best customers? What is your average payment income that of products you're selling? Are they recurring? What are the recurring customers? If you have, for example, using direct debits, which direct debits are always failing and need to be retried? So these are a bit difficult customers and so on. So banks could help, let's say, their customers, their business customers, to also improve their business and improve their risk, let's say, by identifying certain risky customers and so on. And then the final category where we could say is where payment data is even more interesting is not just insights, but it's really completely new revenue generating services that a bank can offer. A lot of banks are working on that to exploit the payment data to offer, let's say, new services. And what are we talking about? For example, the whole sustainability movement is of course really important. Based on the payment data, banks could calculate your ecological footprint. And obviously that can be a very interesting service to offer to your customers and to do some gamification to improve your ecological footprint. Another example that they could do is cashbacks. So quite a few banks are working on that, is that they make agreements with certain vendors, with certain merchants, that if they are doing a payment, you can activate a cashback within the banking app, and that cashback then is automatically identified by the bank, because obviously they see the payment, they see, okay, a payment has been done, and then they give a cashback, and that can give a very positive feeling, let's say, to the customer, and obviously can create additional business for that merchant. And obviously also for the bank, because the bank can get a certain fee on that cashback. So a lot of potentials for things like cash management. There is a lot of banks working on that. If you see all the payments, you can obviously make predictions of what upcoming payments that the customer of the bank will be receiving. If you can make this sort of forecast of the incoming and outgoing cash, obviously you can then propose better ways to, let's say, invest the excess cash, or already offer certain credits in advance when you know that there will be a liquidity shortage in the short term. And if you know that in advance, you can obviously offer investments at a better rate, or credits also at a better rate. A lot of potential if you are able to exploit that data in a good way. So.
Yes, we spoke a lot about the different opportunities, but I'm sure that there are some caveats as well, right? So, for example, when the banks are aggregating and standardizing payment data, and mainly when they are trying to analyze large data and large incoming information, what could be the challenge here? Because I'm sure that, aggregating and standardizing payment data from various sources can be also, facing challenges. Maybe we are hitting some false information that we don't want. Can you just go through all of that? Yes, there's good, but obviously what are the dark side of that as well?
Absolutely, no, absolutely, and that's in the end the big challenge, obviously, because like I said, there are more and more payment rails, different ways that a payment can be initiated, different channels. Where before you just did a bank transfer in your bank, today you can pay with a QR code, you can pay directly an invoice by scanning it. So you obviously can pay with your card, with your mobile phone, and so on. So there are a lot of different channels to initiate a payment, and then there are different ways to route that payment. So that means that where before you might have gotten like from one system and one format payment data, today you're getting it from different systems, different formats, different channels, and so on. Now that makes it difficult, because in the end, you want to have an holistic view of your customer, because if you want, for example, to calculate the ecological footprint, that ecological footprint is not important if you then initiated your payment via card payment or via bank transfer or whatever, how you initiate it. In the end, you want all payments to be aggregated in one place so that you can see, okay, what were all the expenses that they did? What is there, the resulting ecological footprint that I can calculate from that? And so that is indeed a huge challenge, because like I said, you have these different formats, you need to integrate them, you need to capture all them. But at the same time, we're talking about millions and millions of transactions at even the smaller banks. And so, and not to mention then the big banks, we're talking about billions of transactions on a monthly basis. Capturing all that, storing that in an efficient way, avoiding that it costs you millions and millions of euros to store all that. So it needs to be captured efficiently, stored efficiently, and then cleaned up, because there are always like errors in it and certain restructurings that need to be done. First of all, because of these different formats, different channels, and so on. But there can also be like these all kind of small exceptions. For example, if you pay on a web shop, people might have noticed already that a lot of web shops, they work with a PSP to actually manage their payments. Often those PSPs, they take care of the collection of the money. It's not the merchant that is paid out. It's first the bank pays to that PSP, and then the PSP pays out to the merchant. But the result is that the customer sees no longer the name of the ultimate merchant of the web shop where he bought with, but he sees then the name of that PSP, because that's in the end where the money was sent to. So obviously, if you then want to do certain analysis on that payment data, that doesn't work. Now, there is ways then to get not only the PSP, but also the ultimate merchant. That all needs to be restructured, because in the end, you're not interested in that you pay to some kind of financial institution, that PSP in the middle. You're interested to know that you paid to a certain web shop. So all these kind of things, they need to be restructured, they need to be cleaned up, and so on. Additionally, there is a lot of enrichment needed, because if you know that you bought, for example, at the merchant, you still probably need to know what is the type of activity that merchant does, what is the address, where is that merchant located, and so on, because then that allows you to really generate certain insights. If you know that it's like healthcare spending, or it's a supermarket spending, or it's whatever kind of spending it was, that gives you the necessary insight. So all this enrichment needs to be done. And once you have all that collected in, let's say, one very nice data lake, let's say that it has the clean data, the structured data, uniform data, then you can start generating insights. And insights can be very simple. It can be just like dashboards where you generate like aggregated views. Okay, or what is the total amount of this customer in all this payment in the last month? How much expenses did it do? How much all my customers do? But obviously, it can also be much more complex analysis of what is the average value of all my customers that are interested in sports, and all kinds of combinations that obviously you could do. And additionally, this is also a bit where AI then comes in, and that's a bit of the new trend, and that comes in, is that where instead of just having some views and some aggregations on the data, AI can really identify patterns that we as humans might not be able really to quickly see, but that AI is really able. So it's a huge technical endeavor to bring all that data together, clean it up, and then analyze it, and that in a cost-effective way. That is a challenge. Then that's one of the challenges that I'm working on since indeed the last 10 years. Which makes it obviously very, very interesting to work on.
Yes, and as we said, that there is no one size fits all, so every company needs to tune it in for themselves. I remember once we had a client, it was around 2 years ago, when AI was really in the baby steps, so it was not even in the conversation. And we just started to explain the benefits of the analyzing of the payment data, and get the different functionalities out of the gateway. And the client loved it. And at the end of the conversation, I was like, okay, so what are we checking here? And he says, everything. I'm like, we can't do everything. Like, there are hundreds of thousands of transactions. I don't care. I want to know everything. So it's very easy. It's a very slippery slope to get into the overkill mode as well. And there is no good advice on for your company which one is the right one, unless we know that what is the company doing, where are your markets, what are your payment method, what is too much, what is too little, and have someone who is understanding how to transform the data into valuable information as well. So that's also a challenge, to find the right talent, because as we said, if your accountants are dealing with all of this, is good luck for you, because there's not that much of an education on the subject.
I fully agree with that. It's a complex story and it needs to be tailored because of the vast amounts of data, and there are all kinds, like I said, there are dozens and dozens of value-added services that you can get out of payment data, but you can't get all of them. You need to be a little bit picky. There are so many dimensions, so many information that obviously you first need to define certain goals, and then the data can support that goal. But don't start, looking at the payment data to define your goals in all kinds of directions, because then it won't work. So obviously you need to be goal oriented, and the data can then be a means to an end, but not the end in itself, indeed.
Exactly. And it's very costly as well, because as soon as you start digging, then of course the cost can be sky high. But let's talk a bit more about trust and handling the data, because, in Europe, we are very anal about all the payment information and personal information. So how we can make sure that all this payment data which is used is handled in a right way? Where does the responsibility start for the financial institutions? Where does it end? What is the responsibility of the merchant itself of handling their customer details? What is the responsibility of the platform or the payment provider? What's happening with this handling of the data securely and safely?
Yeah, no, that's a very, very good point, because obviously in the financial in institutions or in the financial sector in general, but in general, let's say for any company, trust is like probably your most valuable asset that you have as a company. And in the financial services sector, that's probably even more true than in any other sector. And so there have been multiple examples here in Belgium a few years ago. For example, ING Bank announced that they would use certain payment data of their customers, and there was a whole media circus around it that, this is risky and we don't want that, and so on. So it gave a lot of negative setback on ING at that moment, while in the end their objectives were quite good, and they, in the end, they wanted to do something in favor of the customer, but it backfired completely. And so it shows that it's a very sensitive topic, because payment data is very personal data, very confidential data. People don't want to know that somebody else knows how much they are earning, how much they are spending, on what they are spending, and so on. So even though everybody knows that your bank knows your payments and so on, as soon as customers hear that your bank will start exploiting that payment data, it becomes a bit of like, you're not feeling very, very comfortable with that. And so that is important that banks and also corporates understand that people are a bit anxious when they hear that their payment data will be analyzed. What is really important is then not to break that trust, and to really communicate very clearly, and to guarantee all kinds of privacy rules and security rules in the most strict way, in order not to lose that trust. Now, as you mentioned, in Europe, we're already quite advanced on that, because indeed we have the GDPR regulation that considers payment data as personal data, because in the end, if I get 100 transactions of somebody, most likely I will already be able to pinpoint quite well what to identify almost this person, because you can easily find back where this person plus minus lives, what maybe he's doing, in which company he's working, because you could see which his salary and so on. It's very personal information, and that's how GDPR also let's say has classified that information. So it means that it needs to be very, very strictly organized and strictly regulated. So that comes actually then with three ways that we always recommend, let's say, to banks to use that, to use it in an effective and a good way. So first of all, you have communication. So as soon as you start going to do something with the data, explain it to your customers, be transparent. We're using it that way. We're storing that data. We're sharing it maybe with a third party. All that should be transparent to the customer. Don't hide things, because in the end, if they come out, your trust will be broken. So that is really important. Second is in the end, payment data, even though it's collected by the banks and even it's collected by the corporates, when you're doing a web shop payment or a payment in a store, obviously you know that they have your payment data, but you still consider that it's as a consumer, it's your data in the end, that and you should be in control. And that's also a bit the spirit behind GDPR, is that ultimately your personal data is your possession of the person on which it belongs to. So that means that if a bank is going to exploit the data or going to share the data, you should ask consent to the customer. So important to ask consent. Okay, we're going to analyze your data. This is what we're going to do it. Do you agree? And a customer should be able to opt out. Now, obviously, if he opts out, he will maybe lose certain benefits. And you can make it very clear to the customer, if you opt out that we do certain analysis on your data, that means that you will not get that service, and that service. So in the end, it's up to the customer to decide, do I want to profit from those services, and indeed maybe that people start using my data, or do I not? But you still should give the choice. And a customer, even if I'm given the choice now to analyze my data, he should still be able to change his mind in 2 months or 3 months, to still opt out and have the right, like GDPR also says, the right to be forgotten, the right to see where my data is shared to, and so on. So that's definitely a second aspect, is the whole aspect of consent management, is customer, the ultimate customer on which the data belongs to, which the data deals about, should still be in control of how its data is used. And then finally, you have more sort of a technology aspect, and that is the whole privacy by design, as we call it in the IT terms, is that when you design systems, be it a corporate, be it a bank, privacy and security is crucial. We are getting fraud attacks on a daily basis. We are sharing data. Nobody wants to be hit by that all personal data is lost and is somewhere placed by a hacker on the internet. So it's crucial that you take, as any company that is dealing with payment data, or more in general, any data that it allows to identify certain persons, but especially payment data, given let's say the sensitive nature of that data, to take into account the most strict security requirements possible. That means encrypting all the data, making sure that there are necessary protections, access is sufficiently controlled, that there is two-factor authentication, so that's not just a password, but there is a combination with a password and maybe another security mechanism, that only the people that are really, really needed have access to the data, that certain data, as soon as it's leaving a system, it's like anonymized, and so on and so on. So you have dozens of techniques, but none of them should be neglected, because as soon as you have one breach of data, you lose all the trust, and it's going to take years before you have recuperated from that, because once you lose the trust, it's very hard to get it back.
Exactly, and not to even mention the penalties, because I remember 10 years ago there was a massive PCI DSS breach for Home Depot, and it costed them somewhat around $25 million. Of course, the trust was eroded, so it costed them more on the long term, but they had to reimburse this to the card schemes, Visa, MasterCard. There was another data breach, I think it was around 2018-19 with Marriott, which was which is a huge hotel chain, again for PCI DSS, and again they paid somewhat around $23-25 million. So there are a lot of real life, horror cases when it really opens the eyes of even the biggest corporations that you would assume that your data is safe with all of them, that no, it's just a data hack or a breach or there is some mismanagement of the information. Having said that, I would like to know that where does the responsibility end of the main data collector, for example, the bank or the financial services provider that I am as a consumer having a direct relationship with, and what happens if that data is being outsourced to a third-party provider? Let's say that the third-party service provider is regulated under a different country's rules and regulations. The financial provider handling my data is in a contractual terms with them, and then they outsource all my data and the data breach happens there. Who is taking the responsibility? Obviously both should, but in your experience, what happens usually in real life? That who is taking the blame for this data breach in this case?
Well, in the end, it's also one of the things that is indeed quite strictly regulated by GDPR in Europe. If my bank, for example, is outsourcing the data to another provider, they need to set up a data protection agreement with that party. So that means that they are going to sort of force that third party to, or again, respect certain rules, to respect that the data is correctly stored, they have the right then to do audits, and so on and so on. Again, to make sure that, because in the end, it's not because they decide, my bank decides to outsource to a third party, that was not my choice as a customer. I gave my data to my bank. If my bank decides to use other third parties, that was not my choice. That was the choice of my bank. So in the end, it's still my bank that is ultimately responsible. But obviously, what they will do, they will make everything as possible, as secure as possible, and put certain obligations, put certain risk controls on those third parties, so that their risk is mitigated. So in the end, contractually, the bank will sort of outsource also the risk of that data management to the third party by putting all kinds of contractual agreements and so on. So probably if there would be a breach, they can let's say recuperate the penalty from that third party. But from a trust perspective and from a reputation perspective, it's still going to be the bank that is impacted by the trust. It's not much less than that third party, because that third party probably, like you said, it doesn't have a direct relationship with the end customer. The customer might not have even have heard of that third party to which is outsourced. So in the end, the customer will always blame his bank for not having a good relationship, for not having protected the data, even though the bank might not be at blame. But in the end, it's all about the bank that to make sure that they work with reliable third parties. What we see in the industry, and I see it on a daily basis, because we have customers, the banks are our customers. They put, and correctly so, they put all kinds of risk assessments, very strict controls on us, so that we respect the same level of security, the same level of privacy, the same level of correct conduct to their providers, because in the end, ultimately they are end-to-end responsible, and so that's the way how they try to cover that risk.
This is getting more and more complex, because obviously finance nowadays is global and everybody is operating under different regulation, different data regulation rules, handling rules. So when we are talking about data protection laws in different countries, that's when a summarized kind of dashboard or a software or something comes really, really handy to really understand that what is the risk exposure, and not allow, for example, your sales team to go haywire and start onboarding clients from a country when you don't even understand the data protection rules or the compliance requirements. So get your details in order before you enter a new market. And when we see a lot, for example, with financial institutions and banks who are using correspondent accounts, for example, in Europe, there are a lot of banks and financial institutions who are offering, let's say, a dollar account. That means that you have to adhere to the United States standards in regards to how you're using that dollar. What are the restrictions of using that dollar? What is the the requirements from keeping the different rules and regulations, FATCA, OFAC, whatnot. So that also adds the complexity here, that even just using a different currency might require you as a financial institution or a bank to add an extra layer of maybe unknown regulatory layer to your operation. So definitely standardizing this is almost impossible, but that's when a robust system comes into place. And I think that leads to our next question, which is, what role does technology play in unlocking the potential of payment data? So of course we talked about the regulation, and of course we talked about summarizing different data in different subcategories, but is there anything else that we can unlock here? For example, in what ways AI and machine learning can specifically improve in this accuracy of the payment data? Maybe blockchain technology can be added to the mix because it's very transparent and traceable. Maybe you can mention a bit about the integration challenges. So let's go through the whole technological setting which is affected by this payment data.
No, indeed, and it's a bit like I said, payment data. In the end, gaining the insights from the payment data is only the last step. So it's a whole data pipeline that needs to go through. So from capturing the data, cleaning the data, structuring the data, analyzing the data, and then ultimately generating certain insights from it. And so every step has its technology around it, has its technological challenges behind it. So first of all, we have the capturing, like I said, multiple formats. You need to do a lot of integrations with different systems, different protocols, different formats, and so on. So that is already a challenge in itself. Obviously, there are different types of middleware, different types of tools to help that capturing of data. Then we have the storing of the data. So we still have the raw data, not really structured, but at least we want to store it already. Storing of data, like I said, payments. In a typical bank, we're talking about millions. In big banks, we're talking about billions of payments that need to be stored. And then often for legal purposes, they sometimes need to be stored 10, 12, 15 years of history. So can you imagine billions of payments on a monthly basis need to be stored during 15 years? You can imagine the amounts, the vast amount of data that need to be stored in a cost-effective way. We do see there obviously the rise of clouds is very important there, where the three cloud providers still American, so Amazon, Google, and Microsoft. Like say 5 years ago, the financial services sector was still quite reluctant on using this cloud because indeed there is a risk and so on. Today, they have understood that from a cost perspective, managing these vast amounts of data, but also from a security perspective. I mean, those three parties, they are like the top specialists. They have probably the best people in place to manage their infrastructure in a secure way and so on. So banks have understood that they cannot do cheaper than those firms, and they cannot do better from a security and from an operational perspective than those cloud providers. Additionally, the cloud providers understood as well that having just a service in America, that would be too complex for GDPR. So all the cloud providers, they have now servers in Europe, in different places, in order to ensure that you're still GDPR compliant and that the sensitive payment data is not going cross-border, let's say, going outside of the EU. So that is definitely also a very big trend in technology, and something that can really bring their value, let's say, in order to store those large amounts of data. Then we have the structuring and the uniforming and so on. So obviously there, a lot of tooling has come up into place, and often a lot of those cloud providers, they come also with standard services that can do this analysis of data and this exploitation of data. They often come with like standard services that build on top of their storage mechanisms. And then finally, indeed, as you mentioned, we have the analyzing of the data, let's say the generation of the insights on it. And obviously there we have very specific business intelligence tools that allow you to very quickly drag and drop and generate certain reports, certain dashboards and so on. We also drill down on the data to see, okay, what are the individual transactions behind it. So that is a very interesting evolution there as well. But even more, let's say, today and very, very hot, obviously, today is the AI movement. So AI is perfectly positioned to analyze these enormous amounts of data and indeed generate certain insights for us, and not that we have to ask it. AI will be able to explore the insights, identify certain interesting insights by itself. And so that is also those two worlds, this, I'd say, this business intelligence world where you as a human interact with the data, aggregated data, generate dashboards. And on the other hand, AI that is generating itself certain insights. Those two worlds are also coming a bit together. And so one of the new trends that you're seeing now is that with the large language models like indeed ChatGPT and all the other ones that everybody's talking about, those large language models are now included in those data analytics tools, which allow you then to speak to the data, let's say. So you converse with sort of a ChatGPT and you say, can you give me the top 10 customers of my data? In the end, that question which you type in English or even in your own language will be transformed into a specific query towards that huge database and will then give you back your data. So that's ultimately, that will allow customers, so people that have never heard of IT, that are not specialists in data science and data analysis and so on, and not data engineers, but people that don't have, let's say, the knowledge of the data, to still interact with the data in a very user-friendly way, as if they speak to a person and ask a question. So that is ultimately definitely a very interesting trend, and there we are at the beginning of the journey, but it's going to be a very interesting journey that is coming there. You also spoke about blockchain. Also, obviously, a very interesting evolution. Ultimately, indeed, a lot of payments are happening via blockchain. Bitcoin is the best example from it. In the end, that is a payment that is happening and that is stored on the blockchain. Now, even though there is still a lot of evolutions coming in, so stable coins, for example, are becoming much more interesting. There is the whole evolution of CBDCs, central bank digital currencies, which will work also on blockchains. At the moment, it's still quite immature. Let's say still 99.999% of the payments are still happening on traditional databases, traditional systems, not yet on the blockchain. But it's clear that the blockchain has potential to really move away from this risk of having the data centralized at one bank, and if that bank is attacked, that is obviously a risk. If that bank goes bankrupt, what happens with your data and so on? Blockchain obviously has there a big advantage because it can be decentralized, it can be shared, but still in a secure way. So that's meaning that if a bank goes bankrupt, that data is still there. If a bank can't be attacked anymore because the data is shared and secured in a way, and it's no longer, let's say, one place where it can be attacked by fraudulent people. So a lot of interesting evolutions indeed happening in the markets, a lot of technological evolutions that will change the way, and that ultimately will allow us to generate even more insights from the payment data without needing these like teams of hundreds of specialists that are working on the data day and night. No, in the end, AI will help us to all automate all those steps, this capturing, storing, analyzing, restructuring, and so on, doing that all for us, and so that we can just communicate with the data in a chat-like or even by voice. You ask questions and you get immediately the insights fully via AI. So very interesting evolution that is upcoming.
Once I was in a conference and I met a person who is working for a big robust software company. They are developing software for back-end and front-end for banks and financial institutions. And he told me a very funny story. He told me that the company was working with a bank which was outside of Europe, and it was a very underdeveloped bank when it comes to technology. And then he said that they wanted to digitalize everything, so they introduced this mobile banking function when the client could send a payment order or a request through the mobile, thinking that it's automated. But at the receiving end, it was just a feature when the system just typed the request down in an email, ended up with a human who was manually typing in to their legacy system all the requests, which was going through thought that it was an automated system on the mobile banking. So when we're talking about technology, it's one thing that what is possible and where the future goes, and of course AI and innovation, but I can still see that unfortunately the real life, sometimes it's completely the opposite, because banks and financial institutions, mainly when they are having an old history, they're still struggling very, very heavily with the legacy systems. And it seems like that they have a very old, outdated systems, and these new software providers are just patching the problem, and the more and more APIs and add-ons that you give to this old legacy system, the more and more vulnerable it becomes to cybersecurity threats, collapsing, or not even figuring it out that what is the route of the order through this millions and lines of unknown software code. So what are your experience here that yes, at one point the innovation is there and everybody's talking about AI, but at the other side, we still have this very old legacy systems. How do you, and obviously your software can come across these challenges, and how important it is to name this in your experience?
That's a very valid point indeed. Clearly, a lot of the banks have been developed, let's say, since the year 70, 80, and we still see, if we integrate with banks, we still come across with software that is dating from the 80s that we sometimes need to interface with. So definitely that is the case. The big banks, the incumbent banks that have been around since the last 50, 60 years, or even more, they are still a patchwork of legacy solutions on which they build things, more modern things on top and on top and on top and so on. And so it has become a challenge and a very complexity, and indeed resulting then in these kind of cases like you mentioned, that they are not able to automate it, and then somebody has to type it over manually in order to give the impression that you have automated the process. So that is definitely still be the case. Now, on the positive side, you do see an evolution in the banks. There is a positive trend. So first of all, a number of new banks have originated in the last 10, 15 years, so the so-called neobanks, which had the opportunity to indeed start from scratch, start with modern technology and so on. And some of them, like Revolut, Monzo, Nubank in Brazil and so on, they have become also in the same size of as the incumbent banks. So they are no longer, let's say, small players, but they have become big players. And since they were created quite recently with quite good, let's say, architecture of the solutions, they have less that issue. Now, because of that trend, obviously, that these new banks and the fintechs and all kinds of other trends have come, you do see that banks are improving. At the beginning of the fintech movement, they had missed a bit the boat. They were still working on a lot of old things. Today, a lot of banks, and even the incumbent banks, have become quite modern and have been able to transform already quite some systems and put in place already quite some good technology and so on. So the journey is still ongoing. It's still a very, very long way to go. But you do see a big evolution in the banks. They are becoming modern, and even the old banks are gradually replacing their old legacy systems by newer systems and so on. It will still take years. I'm not expecting that in the next 10 or 15 years, I think we'll still see these legacy systems of the years 80s and 90s that are still being used, because what today they have replaced are typically the most easy systems to replace. the core banking systems, the core payment systems typically, those are obviously the most complex to replace because they are interconnected with the whole bank. They are 24/7 running. There is continuous movement on it. So obviously those are the most complex systems to replace. What is interesting there is that AI can play an interesting role in there, is that it can hide a bit this complexity, because today, even if you're maybe not able, let's say, to immediately replace that legacy system, building things on top gives a risk and it gives complexities in integration and so on. But AI can potentially help to solve those gaps. So AI might not be, let's say, replacing all this patchwork and so on, but it might help indeed to stitch together the patchwork, because AI is also quite good in let's say, automating a manual input into a legacy system, because it can sort of imitate a human being. You could say we're not going to replace the legacy system, and we're not even going to integrate legacy system, but we use an AI that does exactly like the human does. It simulates that a human is typing over the payment that came into another system. That is a possibility. So you with AI, that it simulates a human being, and in the end, okay, it's not the nicest integration that you've done, but it's still going to work, and you will have automated really this system. And to your example that you gave, this person that today still has to type in that manually that payment might get replaced, and then might be doing something with that creates obviously more value for the bank and for this person as well, that it can be more challenging indeed.
Exactly, and if it works, it's not stupid, right? So as long as it works, then that's what matters. But I can see that it's more like a force sometimes than a choice, because innovation is one thing, but sometimes the regulator has to step in and force you to do certain things. Because what I've noticed is that a lot of times banks, financial institutions, because their hands are very tight, because they have to adhere to a lot of regulation, they have this attitude, don't rock the boat. If it works, don't touch it, right? As long as I'm making a profit, I don't want to replace the system. I don't want to have any add-ons which have any kind of risk of the service disruption. I don't want to modernize. I don't trust it. I don't know how to do that. So they would rather not do anything. And then we have the regulatory forces, for example, DORA or any other, the payment directive, which is coming out. So there are a lot of times that the regulator has to involve, for example, what we also seen in UK at the open banking, that no, you're just way too comfortable here. You need to reshape your systems. You need to do some kind of audit and checks. So that can also come from outside to shape up the industry a bit, right?
No, absolutely. That's a very, very valid point. And we have a few very interesting ones coming up. You mentioned DORA, which came into effect, I think last week it was, it came into effect. So yeah, that obviously forces banks actually to do something that they should have been doing already, is ensure that their systems are reliant, resilient, secure, and so on, which obviously makes sense, but which might not have been implemented fully at full scale already at every bank. You mentioned indeed PSD2, now coming the PSD3, which allowed to open up the banks and indeed give that ability to expose the payment data, to get that payment data out, which obviously then creates a lot of innovation for third parties then to use this payment data. And then there is one also upcoming, is the instant payment directive of the European Union, which also forces them, because if that directive wouldn't have come, I think we probably instant payment was growing, but now it takes an exponential curve, obviously, because of that directive. So it forces a little bit banks, and we see that as well. They are working probably those three projects that I just mentioned. All banks are investing millions in those projects because they need to comply. But it's a way as well. For example, for instant payments, it requires a complete refactoring of their payment system, because their payment systems were legacy systems that were typically batch oriented, that did huge batches and then delivered the file at the end during the night. Instant payments, obviously, it needs to go through immediately. With the legacy systems, that was not possible. So that is a trigger indeed to replace the legacy systems and replace it by something modern that currently is still residing next to it. But what we do expect is that instant payments at a certain moment will become the norm. And at that moment, probably the old batch-oriented payment systems will probably be decommissioned, and at that moment, fully replaced by the instant payment systems. So yeah, again, indeed, the regulator can push innovation forward. Can sometimes also block a little bit innovation, like you said, banks are risk averse because of the regulator not liking any issue, and typically implementing new IT systems often gives issues in the beginning. But yeah, it's a good mix to push certain things forward, but also to be a little bit risk averse, because in the end, you don't want your bank to have, let's say, the motto of Meta or Facebook, like move fast and break things. That's probably not something that you want in the financial services industry either. So you wanted to innovate, you wanted to move forward, but also in a controlled way. Because financial services are way too critical for our whole economy, way too important, let's say, to take any risk, and so this is finding this right compromise between innovation and guaranteeing stability is obviously a tough choice to make, but I think it's moving in the right direction.
As one of my clients said, that if I knew that fintech is so complicated, I would have opened a bakery, and I couldn't even blame him for that, because there are a lot of things which are coming out of the blue, and now we have to adhere, and the deadlines are very short. What you haven't seen, for example, even 5 years ago, when the fintech was the boom word, and it was no AI, everything was about fintech and embedded finance and the crypto and reshape the financial industry, and all of those success stories now are scratching their head of how to adhere to all of these new regulations coming out. Joris, is there anything that you want to still mention we haven't talked about? Is there something else that you feel that we definitely need to address?
No, I think we covered quite well. Let's say the huge potential of payment data, the technology that's around it, and the challenges, but also, let's say, the new trends and all the evolutions. So a lot of interesting evolutions upcoming, like you said, instant payments, making payments even more instant, DORA, which will make it more secure, and in the end, we have in the UK there are initiatives that any authorized push payment fraud needs to be compensated by the bank. Probably Europe is also going in that direction. That will force banks, because if any fraud, they need to pay back, let's say, a part of that fraud. Obviously, they will take measures, because otherwise it will cost them a lot of money. I'm thinking also about FIDA, for example, the Financial Data Authorization Act, where indeed today we're just sharing payment data, but we could maybe share also credit card data, securities data, and so on. So even there, that gives you even more things to gain insights about, if it's not just, let's say, the payment data, but also all the other financial data. That opens again an even more bigger world of opportunities. So very exciting times ahead. For us, obviously, being a fintech that is being at the core of these innovations, that's really interesting. But obviously, I think every bank, but also every consumer of banking products or financial services products in general, will profit from that. And obviously, hopefully, everything around finance will become easier and so on. But yeah, I think it's good that we are talking about it, because today there is still a lot of complexity, and it's good to educate people around those concepts indeed.
Definitely, and I can see that a lot of these things are not publicly known, and even when you're checking financial companies and even banks, oftentimes these companies are so busy with developing technology and adhering to the new regulations, they don't see the opportunity, unfortunately, only just the burden. So that's why it's important to talk about it, bring up to the surface that yes, if you play your cards right, that could be very beneficial and very lucrative as well, to talk about these kind of things, because there's always a silver lining on every bad things. Absolutely.
I know. So very, very nice indeed to have this conversation. Always happy indeed to share insights and then to talk about it, because it's such an interesting and such a fascinating topic. So big thanks indeed for the invite. And so it's really nice to discuss all this.
Thank you. Where do we find you, Joris? Let's see that we've got an email address for you, but where are you active on LinkedIn if someone would like to ask any kind of question?
Absolutely. So indeed, so you can indeed send me a mail on this email address or go to our website, which is also intix.eu. But mainly for my personally and also a little bit about Intix itself, you can find me on LinkedIn. So again, feel free to send me a message, connect with me on LinkedIn, and I'll happy to accept it and share certain ideas.
Amazing, and thank you ever so much to be here with us and share all of your knowledge. Thank you that allowing me to pick your brain and bring up to the surface all of those important information. And whoever is watching us, I would like to encourage you that please speak up, please reach out to us, please share your story, your success story, your struggles, because that's the only way that we can create a more ethical, transparent, and standardized industry when everybody's on the same page and we are all rolling towards the same goal, other than just be scattered all around, and there is no opportunity to bring up the knowledge in the expert's head. So thank you very much again. Please check out our other webinars as well, and see you at the next episode. Thank you so much.
Okay. Thank you, Victoria, and see you next time. Bye-bye.